Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago, that toddling town, as Mr. Sinatra sang. Joining me today, shoulder to shoulder, normally from way down in Atlanta, Illinois, it's Director of Buyer Relations, Mr. Verl, no doubt Prather. Verl, how are we today?
I'm doing good, Jim. Drive up here today wasn't too shabby. Got here in about 2.5 hours. So.
Not too bad.
Yeah, no doubt. It's good to be in Chicago for the day.
Okay, straight shot up I-55?
That's right.
That's beautiful. Right. Okay, guys, you all know now that Atlanta, Illinois, is a straight shot up I-55 about 2.5 hours. So when you see us in person, now you know we have another talking point to discuss. And it's good for my cousins who always ask about you. This is a huge episode for them, that we are shoulder to shoulder, physically here in the office together. This is a big stinking deal for the Matthews family.
Are they in Chicago?
They are. They're in Chicago.
Bring them up.
Yeah, that's right. That's right. They should have been here for a live recording. So we've got a lot to run through here with Verl. We're going to touch a little bit on last week's WASDE report and just kind of chat the grain markets here for a little bit. So Paige, if you would kindly timestamp the broadcast. It is Thursday morning. We'll take a quick look at the markets here. Things have been a bit quiet this morning as we kind of push into the holiday season. We've noticed volume start to come off a little bit, and we got through last week's WASDE report. So things have been a bit calmer, but right now we've got corn right around unchanged. We've got March futures are currently trading right at 480. I know on last week's episode, we talked with Brandon and Cody about could we potentially move from this 480 to 485 threshold on March. So it remains a very interesting holding pattern near this 480 level. We have March wheat still holding back above $6 a bushel. We're at about 610 this morning. We got March beans at 1330 remaining a little bit elevated here as we trade towards the end of the week. And soybean meal, which has normally been that stubborn little byproduct. We've got March futures below $400 per ton. We've got the nearby Jan right at 400. But good to see for those trying to hedge that JFM or purchase that Jan, Feb, March period on protein. We are bringing that March level back below 400 again. Time will tell to see if we hold here as we turn the calendar on 2024. But it's at least good to see a little less stubbornness out of that stubborn little byproduct. So after running through the markets here, we discussed that WASDE last week. When we were moving into that report, we thought, for the most part, Verl, that's a pretty uneventful report because everybody's kind of looking forward towards that January report. That's the big one. Like the USDA wants to give us their final production numbers in January, so they don't do a whole lot of activity in December. But it's still an important report because we might start touching South America a little bit, which I think we did. And then I think we maybe start to focus a little bit more on our demand as well, which I think on the corn side we also did just a touch. So, Verl, what was your take on that WASDE report last week?
Yeah, well, you're exactly right on that, Jim. The December WASDE kind of came in with a whisper, and the reaction of the market was pretty subdued, right? And the reason being, is this balance sheet for corn and soybeans specifically, at least domestically, changed very, very little, right? We saw a rise in export demand for corn by 25 million bushels, and the soybean balance sheet was not touched whatsoever. I will note, though, that this rise in corn demand, if you take it back towards a June to July time frame, there were a lot of traders around that thought there was absolutely no way that we were going to be able to export as much corn as the USDA was thinking at that time. Well, guess what? Here we are, right? And so far, the wheels haven't necessarily fallen off this bus yet, at the very least, right? And corn exports have actually hung in there. No thanks to China, by the way, but we do have a lot of other great global partners that are interested in U.S. corn.
Yeah, I think Mexico has been by far and away the most active buyer. And I think they've set some records already in terms of their purchases for this marketing year of U.S. corn. So they have remained very active, our neighbors to the south. I believe Japan has also been incredibly active in maintaining a bit of this maybe support from the export side of things. But like you said, no thanks to China. Those guys have been incredibly quiet on the corn front, really dating all the way back to beginning of 23 here, when we saw a lot of those big cancellations in that like early April into May type of time frame. They did step in a big way on wheat here a couple weeks ago. So we saw wheat futures run up a good buck or so per bushel, but corn, not a whole lot of bounce there. So it'll be interesting to see what we do. But I think it is important to note that we did actually raise exports on corn, 25 million bushels.
Right.
And every time we talk with our respective row crop and or dairy farmers, the talk has just been, hey, export demand is pretty lackluster here, nothing to report. And yet the USDA thought there's enough that we should at least bump that back up another 25 million bushels. So a slight tightening of the corn sheet. From a global perspective, I don't think we did a whole lot on corn, but any updates maybe on the South American front from a grain perspective?
Yeah, so obviously South America this time of the year is top of mind to a lot of traders, right? I mean, we just got through the soybean planting season in Brazil. Obviously, it didn't come without a hitch. There were a lot of weather issues that came up along the way. And obviously, this is going to have implications potentially on not only the supply that they receive on their soybean crop, but additionally, everybody is really trying to weigh how delayed the safrinha corn crop is going to be planted in Brazil. And obviously, come our summer, right, in May and June, we will start to see the fruits of that production. So there's a lot of time between now and then, a lot of things to change, but the market is consistently looking forward and trying to decide what the fair price of corn is. South America is obviously a big player within our markets.
That's exactly right. They're the big player in our markets for sure. And the Brazilians have absolutely taken ownership of, being the big kid in town on both production and or exports, really leaning heavily towards the Chinese in terms of a customer on purchasing their crops. We talk about that second corn crop down there that they will plant after beans are harvested, that safrinha crop. And we keep mentioning that when we talk to folks because that's the big export crop. They usually harvest that first one. There's a lot of domestic usage with their initial corn crop, but that second one is a big player on the export market. So important to watch. And you noted the bean planting window for them is essentially wrapped up. There's still some talk of maybe some replant in a decent amount of areas. Again, the south has been very wet, too wet. The center to north has been dry to too dry. So it'll be interesting to see how much needs to get replanted. But the more you potentially delay the development of those beans and or replant those, the later you push back that corn planting on the second crop. So it'll be interesting. But I think the USDA did at least touch the Brazilian soybean production side, not by much. I think they trimmed it by 2 million tons, but fairly interesting. I had an incorrect bold prediction on last week's episode where I called for a sub 160 bean number out of Brazil. It's a bold prediction. It didn't happen, but we got close. It was like 161. What else do we have to look for on the soybean side as we kind of push through, into 2024?
Yeah, I think this week was a good reminder that it's not only weather that causes ruckus within our grain markets. And all eyes were on Argentina as their new president was elected late last month. And one of his first actions we actually learned about this week, and that was the devaluing of the peso within Argentina. And all of a sudden, Argentina on a global scale, their agricultural products are on sale. And obviously, they're a big producer of soybeans and also soybean meal and oil as well. And they have the ability to really change the way people look at U.S. products.
I think the Argentines are going to be an interesting wild card because, for one, regardless of their politics, they have been a wild card over the last two and a half-ish years just because of what La Nina did to their crop cycle. So the La Nina patterns for the Southern Hemisphere dried out the Argentines very substantially. And I think it's provided a lot of support in the commodity markets in general the last couple of years. But the protein space, especially, you add the problems of protein availability from the Ukrainian conflict and add on to the fact that the Argentines have had a much smaller bean crop. And it's important to remember, Argentina is primarily planting and growing those beans to ultimately crush them, and they export those byproducts byproducts in a really big way. So when they can't come to the table, other countries do. And the U.S. has, in a sense. We've had a much larger export program for meal. We've seen that protein support reflected at the exchange now for a couple of years as well. And obviously our dairies have been struggling in terms of gauging those high protein prices and waiting for some longer term relief as we move forward. And I think on the political side for Argentina, this new president, he's going to aggressively go after the currency situation there. He's also potentially going to try and cut back some of the soybean export taxes. And like you said, if their markets are on sale, that will help. So we'll see how he kind of maneuvers his way through the Argentine Congress on some of those. Bringing it back to the U.S., I think we've been aggressively crushing soybeans over the last couple of months, and yet, Verl, on the WASDE report, we didn't touch the U.S. balance sheet. We didn't do anything. Left it completely unchanged. Should we be expecting a cut in the balance sheet maybe in January or forward as we ramp up that crush usage a bit, or do you think we're capped out at this stage?
That's a good question, Jim. I do think we've got some room on the crush estimate currently from the USDA to bump it up a little bit. Ultimately, the domestic soybean balance sheet in the U.S. is so tight that even 20 million bushels makes a large difference, right? And so in reality, we've got to see that come from exports, right? And so far, exports haven't been off terribly. The USDA has been pretty aggressive since July, cutting export estimates on soybeans. And so it'll be interesting to see if going forward, if they believe that, all right, we're finally at a point that we're confident in this number, if they need to continue to cut the export number to kind of allow more crush capacity.
Yeah, I think it's important to keep watching these crush figures as well, because one would hope that crushing more beans means we have more meal available. And for our dairy farmers, those buying this meal, we would hope that, offers would come down from a basis perspective, that pricing would come down at the exchange. We've seen the futures relief lately. The basis relief has not quite been there yet, at least for the soybean meal side of protein. There's also a lot of chatter on both sides, beans and corn, about what interest rates have done to storage costs for guys, how guys may not want to ultimately keep grain in the bin just because they're talking of, storage costs of up 10, 12, 15 cents a bushel, maybe as you push into the winter. That eats into margins. Have you guys had any of those discussions on the buyer relations side in terms of what folks might do once we turn the calendar year from a storage and or cash flow or accounting perspective on selling this crop?
Yeah, there's no doubt that the American farmer has had some nice margins over the last couple of years. And to a large degree, we've seen a lot of payments being deferred. I don't think that's any secret, right? Most folks would understand the reasoning why. Now, I do think that a lot of folks are looking at what their operating note is charging them a month for interest. And ultimately, if their accountant starts to let them start taking some income starting January 1, I think it can let loose some bushels from the producers. We've talked to a lot of grain buyers across the Midwest, and all of them are basically pointing the direction of, hey, the producer still owns a lot of the corn crop, especially at this time. And so once the calendar's turned on the new year here, we may see some additional bushels hitting the scales, if you will.
Yeah, and we've been asking, on the grain and feed buying side in terms of representing the feeders, right, the dairy and livestock guys. I think because of this, aside from just overall bearish sentiments in the corn market, from a basis perspective, we've been asking guys, for Jan, Feb, March, we've been really waiting until almost now to step in and start to take more ownership of that and or hedge it, because we're hoping for that flow and to have basis come down and provide some relief as we push into the new calendar year. So it's going to be an interesting stretch going forward. And Verl, we were asking Cody and Brandon last week of what they thought of this corn market. And there was a lot of debate on, at the time we were trading 485 futures, we're trading 480 right now. What were we going to hit first? 470 or $5, 15 cents on each side. And I think Cody and Brandon both went with, we'd hit the lows. We'd hit 470. So even with 10 cents from the lows now, a bold prediction from No Doubt Prather, What do you think we trade first on March futures, $4.70 or $5?
Being only 10 cents from 470, I guess it's not as bold as taking the $5 number. But I will say this, the fact of the matter is that the producer still owns a lot of corn. And we have seen over the course of the last few weeks that when the $5 cash number comes around, they are coming out of the woodworks to sell it, right? And so in my opinion, this market's going to have a heck of a lot of resistance to get to that $5 area on March. I believe that we'll see 470 again before we see $5.
Sell with both hands, as we'd say on the trading floor.
That's right.
It'll be interesting as we do try and push up towards these 495 levels, at least here and there on March futures. But like you said, folks ultimately are stepping in. We find a lot of resistance there. It just feels like maybe there's just enough support from the wheat market at the moment. There's enough support from the Brazilian situation that for whatever reason, folks aren't willing to just hammer this thing back through these lows just yet. But there's a lot of time. And that's where we're asking folks to remain patient so far. We usually talk about meal in terms of having, Jake and folks from the feed team on, but we'll stick to beans. We've got March beans trading at $13.30. So bold prediction, what do we trade first? $13 or $13.50?
That's easy. That's $13.50. There's no doubt.
No doubt, yes. That's fantastic. And we've had nice pressure in this market. Most of it has come from the Brazilian forecast looking, let's say, not as bad. I wouldn't say they've ever looked great over the last 3 months, but maybe looking not as bad. So we've seen beans come off a little bit, but man, it does feel like things are just tight enough here, just a little rough enough in Brazil. The USDA already trimming back some of that tonnage from their production numbers that maybe there is just this floor built back in around $13 on March. And yeah, maybe $13.50 is next before 13. Anything else we need to hit, Verl, before we wrap up?
I think overall in this corn market, we're range bound for the next few weeks. Obviously, soybeans have the ability to have a little more volatility. Keep your eyes on this January report. There's a pretty decent chance that the USDA decides to come in and raise corn yields. And obviously that could have quite a toll on corn futures.
Yeah, it'll be interesting. They usually save the fireworks for January. And there's a lot happening there too, not just the final print and moving into South American production, but we also will have it'll be the stocks on and off farm here in the U.S. as of December 1st. So that report will be out actually about 2 weeks later than usual, just because of the New Year's holiday. So it'll be interesting to see how much was actually here on hand as we were finishing up harvest from the U.S. So that will be a very interesting report. And I hope Verl will have you back after that to figure out what on earth happened in that January report. So excellent work today. A huge thanks to Verl for driving all the way up from Atlanta, Illinois, and returning to the show. Great to have your insights. And we'd also like to thank the Ever Ag Insights crew for their support. Thank you to Paige for production magic. Thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your
feedback.
That's all for today. We'll see you next time on the grain feed.